Hello and welcome everybody to today's Commodities Corner session presented by myself, Phil Carr, at the Gold and Silver Club. Just before we get started, a quick disclaimer for you to have a read through, and then we will continue with the session. Okay, fantastic. So today's session, we'll be covering the following. We'll be going through live market analysis. We will be providing a watch list of trading opportunities, a forecast of where we see gold, silver, oil prices heading next. We'll be answering questions and, of course, providing live support. So any questions or comments, as always, you have a little chat function there on the session, so feel free to ask any questions. Contributions, as always, are very welcome. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading as internationally respected experts. Our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Of course, it's a pleasure to be here on binary.com as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is www.thegoldandsilverclub.com. Right, so let's have a look at the performance of the market so far in 2017. So we certainly haven't seen a lack of trading opportunities so far this year. We've seen some big moves into the commodity market. So to give you an idea, just go bigger picture and see how the markets have performed so far in the first 2 weeks here. Palladium has been the top performing commodity. It has now surged over 11% in the first 2 weeks of the year already. 11%, huge move. Coffee also just under 10%. Platinum 9.5%, sugar is up 6%, silver is up 5%, copper up 5%, gold up 4.5%, cotton up 4%, cocoa up just under 4% as well. So you can see already this year we've had some large inflows into commodities. Something that we talked about quite a lot towards the end of 2016 is what usually occurs at the end of the year. Just for a bit of a recap, is that you see traders liquidating their positions at the end of the year. So essentially, what does that mean? They're closing out their trades for 2016. They're closing their positions. They're closing the books on the year, realizing the profit and loss on all of their trades. And then with that, you can see quite a lot of markets pull back, come down in price right at the end of the year. And then often you get this surge in prices over the course of January, which is exactly what we've seen this year. Remember, various funds, institutions, once they have new fresh capital, which has been provided to them via investors and so forth, they can't sit on that capital. They can't just accrue that in a high interest savings account. It needs to be put to work in the market. So therefore, at the beginning of the year, what you often see is some big inflows into specifically commodities. And that is exactly what you've seen. I mean, 10% move on palladium, almost the same on platinum, coffee, sugar. This just gives you a great opportunity to trade each year. And I hope some of you have capitalized on this so far. If you've missed out on some of the trades that we've had so far in 2017, not to worry. Let me break it down for you in terms of what we can expect over the course of this year. So if you've got a pen and paper handy, your notepad, or if you've got your diary, and if you're looking to book any holidays this year, time that you're going to be taking off, just be aware of what months of the year this year we're going to get some high probability, big trading opportunities, okay? These are the trades that you don't want to miss, particularly as we go into, of course, next Friday is Donald Trump is going to be taking office. For those of you who might have seen his press conference on Wednesday, that was very interesting. It certainly caused some market volatility. Gold broke out to 6-week highs after that, and we've seen some big moves off the back of that. It was a very interesting press conference. I would encourage you to either go to Bloomberg or Reuters or go onto YouTube, watch the Donald Trump press conference that he did on Wednesday, because that could give you an idea of what we could be in store for this year in the financial markets, which could be quite big in terms of the sort of trading opportunities that will result. So next Friday could be quite big, Trump taking office. Then at the end of January, beginning of February, we have the first FOMC meeting of the year. Of course, the Fed in December, mid-December, they went ahead and increased interest rate hikes. And with that, we did see some big moves in the market off the back of that. But within 2 days, gold bottomed, silver bottomed, and we've seen them rally since then, which is exactly what happened back in 2015, where a lot of the move was priced into the market prior to the Fed increasing interest rate hike, increasing the interest rates. And with that, we bottomed out at the end of December 2015 as well as 2016 in gold and silver prices. So we're seeing some very similar patterns occur in the precious metals. In March, of course, we have some big news items. We've got the Dutch elections, but also we have UK triggering Article 50 and Brexit begins. So, of course, big volatility potentially on the pound, on gold, on a number of different markets, US dollar, so that will have a big impact. We've got FOMC meeting in March as well. In April, we have French elections and European Central Bank meeting. In May, another OPEC meeting, which will definitely influence oil. In June, we've got an FOMC meeting and an ECB meeting. In July, this can be a big one. Fed Chair Janet Yellen's semi-annual testimony. That can have a big impact on the markets. In August, we've got the German elections. In September, we have an FOMC meeting. In October, FOMC meeting. The FOMC meetings over September, October, November, and December are often the most high impact of the year and can dictate the market significantly. So it's worth having those in your schedule. In November, Fed Chair Janet Yellen is giving her semi-annual testimony. And in December, we have another OPEC meeting and a final FOMC meeting of the year. Remember, the November OPEC meeting caused oil to break out 10% in 1 day and 14% within 1 week. So some big moves on the markets. So with that, hopefully that gives you a bit of an idea of how 2017 is shaping up. These are scheduled events so far. We will have unscheduled events which will be coming into fruition in the months to come as well. So these are just the scheduled events that we know about. There will be more coming up this year, but it gives you a bit of an idea of some of the trading opportunities we're likely to get over 2017. So with that said, let's go over to the charts. We'll have a look at some of the trades which we're in at the moment, new trades which are setting up, how we expect the markets to move over the US session today as we go into next week. We'll look at the following higher and lower type of trades, very straightforward. Why is it straightforward? Quite simply, you don't need a stop loss, you don't need to take profit. All you need to do is predict the right direction of the market, either up or down. You just need to time your entry well and your exit well. Those three criteria are what will make you successful trading binary. So again, timing your entry, direction, and timing your exit. Very straightforward way to trade the markets, very straightforward way to trade volatile markets, and you can utilize this certainly as a tool for your trader toolbox. Very handy. So moving over to the markets and going over to the charts, I'm just going to switch screens with you. So hopefully you'll still be able to hear me when I do this. So we'll just do a quick check-in once we do that. Okay, so quick check-in, guys. You can still hear me okay, and you can see the presentation okay as well. Yeah, fantastic. Okay, perfect. Right, so with that, let's first of all, we will start off with gold here, okay? So gold, of course, has had quite a significant move. For those of you who have had some good comments and feedback on this, and I appreciate it, thank you. For those of you who joined our webinars at the end of December, where we talked about the potential for gold to do exactly what it did in 2015, it has played out perfectly. Within 2 days after the FOMC statement, gold reached the bottom. It did not continue to break down. It then continued to consolidate over the final week of December, and then we actually broke out a little bit earlier than usual. On the 29th of December is where gold started to break out, and since then we've been in this trade rallying, making the most of this rally to the upside. So gold right now, a few points to note at the moment. It did break out to 6-week highs this week. It has managed to close above the 50-day moving average yesterday. It came into an important Fibonacci level just yesterday, which was, let me just draw that on your chart. It's a 1206 zone. So you can see this just on the chart. This was quite an important level that we just came up to retest yesterday, found some rejection. So far, we're still getting support above the 50-day moving average. I expect at this point we could be in for a bit of a pause in price with gold. It needs to consolidate some of the gains. Short term, it's overbought. Longer term, over the course of this quarter, I see more upside, most notably between now and about mid-February, so the next month or so. I do see higher prices for gold. but it needs to take a little bit of a pause here. Unless it can get above the 1207 zone, then it would shoot up to 1230, which is the 50% Fibonacci retracement level going back to the US election where Trump won, going back to the low from the FOMC statement where we saw 1122 US dollars per ounce get put in as the low. And so far, we've retraced 38.2% off that move. So we've had a significant move so far. Off the lows, it's been 800-point move, which is quite significant for gold within just 2.5 weeks. A normal January effect rally from the low to the high lasts anywhere between 900 points to 1,800 points. Last year, it was 1,800 points. The year before that, it was 1,500 points. The year before that, it was 900. So far, we're up about 800 points from the lows, and we're sitting just below the 1,200 zone right now. What would I look at for a new fresh trade? I'd either look at a breakout above 1207 or a retest of 1180, so buying on dips to 1180 or buying on breakouts of 1207. So that's what I would look at. In the short term at the moment, looks like gold is starting to twitch a little bit as we get into the US session today. It's not had a break below yesterday, well, it hasn't closed below yesterday's 50-day moving average or broken below the 50 MA so far. It's building a bit of a base. You've got a very clear V-shaped reversal pattern in development on gold. If you have a look at that on the weekly chart as well, you can see this V-shape which has been in development, and on the monthly chart, we've also breached above last month's highs as well. So we're starting to form a bit of a base, finding support, again, another major Fibonacci retracement level, but we are overdue a bit of a pause in price here. We need a catalyst to really bring gold high here. It could be that it just gaps on the open over the weekend, opens back above 1,200. We'll have to see how it closes today. If gold over the US session today manages to breach 1207, that would be likely to see the price move back between 1220 to 1230. Ultimate target for gold right now over this quarter would be a move up to the 200-day moving average. That would be a best case scenario, which would take the price up to 1268 if it continues to rally. Timeline on that would be between now and really the end of February, approximately that period of time. Difficult to give that a timeline within the next week or two because we probably need to pause here at the moment. Typically, the second week of the January effect, we see a pause. The third week, it gets going again, and the fourth week is where it catches fire towards the end of January as it transitions into February as well. So that's what I'm looking at right now. Best case scenario would be a breakout towards 1268 at the moment, which would meet the 200-day moving average. Then from that point onwards, as you start to get into March, April, that's normally more bearish. But what we're looking at here is, of course, the US dollar index, which has been correcting now for about 2 weeks here. It broke out at the early part of last week to 14-year highs, excuse me. Oil broke out to 18-month highs. But the US dollar broke out to 14-year highs last week, but it was a bull trap, so it broke out to those highs, then reversed, and since then it's been correcting. It's retesting the 50-day moving average at the moment. If it closes below the 50 MA today, that'll be a signal that we could actually get a move all the way down to the next major zone here, which is about 99 level, which would be a significant drop for the US dollar. And if we were to see that sort of a move, that would definitely be a catalyst for higher prices on a number of commodities. I suspect today we might just stall on quite a few markets, might be a little bit quieter. They might just need to pause before their next big moves here. But overall, gold is looking relatively strong here at the moment. V-shaped reversal pattern, holding on to gains. If it gets another day's worth of closes above the 50-day moving average, a lot of investors and institutions pay a lot of attention and put quite a lot of weight on a close above the 50-day moving average. There are various trading programs and trading strategies which revolve around key moving averages such as the 200, the 100 and the 50. What does that mean? It means if you're trading in a bank or it could be a fund, you would have a buy signal which would show that gold is above the 50-day moving average, and then they would look to position themselves for a buy on a couple of closes above that level if we start to see that transition above that level, which essentially, whilst it's below the 50 MA, it could be viewed as bearish. Whilst it's above it, it's bullish. It would be a buy signal. But what's interesting at the moment is still up to this point, we'll get the commitment of traders data out later today, but up until this point, we still haven't really seen funds get into this trade. There's been a lot of hedge funds which have been selling into gold following on from the US election, which is no surprise. We've seen over a 2,000-point breakdown in prices on gold since the US election, and all of those funds have held their sell short positions into December. Now they're coming out of those sell shorts as, of course, they want to bank some profits on that before the price keeps going up. And as they're unraveling those sell short positions, you're seeing the price of gold go up. But they're not at this point in time switching positions and becoming net buyers. They're staying net short, which that tells you that overall they're still expecting lower prices for gold. But what we need to look at is the data coming out today, which comes out every Friday from the commitment of traders to get a better idea of what their overall exposure is, if they've started to switch positions going to longs, buys. But what does that tell you? What it tells you, once the funds do switch, if they do switch and instead of being net sell short in the gold market, if they change and go to net long, that will cause a big move higher, and that's where gold will catch fire, and you'll see these 200-300 point moves in a day, and you'll just see it break out significantly. We're not really at that event point yet, but we could get there if we get a close above the 1207 zone. So just to put that on your radar, we're not there yet. Have that just in mind. Now, in terms of other markets which we've also seen quite significant moves on over the last few days, of course, palladium had quite a significant breakout higher, 10% move, best performing commodity so far this year. Of course, overdue a pullback at this point in time. It's overbought at the moment, but that's been a good breakout. Platinum as well has had a significant breakout, up 9% so far this year, consolidated over December. Big pop to the upside. Now it's just consolidating and pausing yet again. Not really too much to be done on both of those markets right now, other than wait. Again, I'd look for a buy on gold above 1207 or a retest of 1180 at the moment, unless anything majorly fundamental changes in this market. Right now, nothing's changing, so I would just stay with that viewpoint at this point in time. Silver's also been gaining some ground. Gold to silver ratio favors gold over silver at the moment, but you can see silver has also formed a basing formation. It's come off the lower end of the trend channel here. It hasn't had such a big move as gold, platinum or palladium, but it is coming back towards the upper end of its resistance zone. It's trying to break and close above the 50 MA, sort of backing and filling at this level at the moment. Might be a little bit of a pause this week. Often what you can see around these key zones, around the 50-day moving average, around these points, is that the price will battle at this level, and then especially over a weekend, it can then gap higher on the Monday open. So it's just something to watch out for and be aware of, that when it's battling around this level, if it does close above it, you could see tonight, if it closes above the 50-day moving average, we might see some gapping on the Monday open, as institutions might decide to buy it over the weekend when it's not available to private or retail traders to trade, but institutions can trade these markets over the weekend and cause gaps on the open. Just be aware of that. Oil at the moment, we caught this for a short-term sell short earlier on in the week, where we came up to major resistance. We formed a bull trap. So oil broke out to 18-month highs, then formed a reversal into the close, and then consolidated, but gave us an opportunity to sell at the beginning of this week. Very quick sell, just got in and out of that exiting out of the trade by the time the oil inventories came out on Wednesday. And subsequently, we've seen a reversal. It's sort of backing and filling at the moment. We can have a look at a raw chart. This chart is, let's look at that on a raw chart, see what we can do to bring this out on a raw chart. Hold on. A raw chart will just allow us to get a little bit more data on this. Okay, let's have a look. US oil. Yeah, then we can draw some trend channels. You could argue that, because if we have a look at this on a monthly chart, raw charts can just give you a better picture sometimes of what's going on. You've got this overhead trend channel on the monthly, which we battled with last week. If you put it onto a weekly chart, you can see that more clearly, this overhead resistance level that oil is clearly not being able to break above at the moment. Then we just want to get a parallel level on that as well. So if we can just bring across a parallel trend channel as much as possible. There you go. So that's a parallel trend channel moving up and down between support and resistance along these lines. Then we would want to draw in another trend channel, because we've got a secondary zone of resistance here as well, which we're just about finding support on at the moment. So if we look at a raw chart, that's what we're looking at. Want to see how it closes today. But then if we have a look at it on the daily, we've also got the potential for a new trend channel to develop on oil, which it's struggling with at the moment. And if it can't break above it, we could just be in for a rotation back towards the lower end of this zone, which is what I'm looking at the moment, for a potential sell short opportunity on a failed move above this resistance channel, taking it back towards the lower end of the trend channel, especially if an inside candle develops today. We'll watch that on the 4-hour chart. 4-hour chart, you can see clearly finding some resistance there. So I suspect oil could be a sell around this zone. We're neutral right now, waiting on a bit more confirmation. Obviously, if it breaks above this trend channel above 54, I'm not really interested in getting into this trade for a sell. But if it can't manage to break above this zone, and then if it creates a sell short opportunity, breaks below yesterday's low, I suspect that could give us a trading opportunity there. Just going for a sell, take it back down to the lower end of this trend channel. So just be mindful of that. That's what I'm looking at for oil at the moment. My bias is for a sell over a buy right now, but I need a bit more time in terms of price structure to develop in order to go for a sell. But I would say bias is to the downside as opposed to the upside at the moment. But you can see that on quite a few different charts, what's going on here. Now, of course, if you do want to get kept updated during the week of our trading opportunities, the live trades that we're taking, entry, exit, take profit targets, get notifications, join our live trading rooms, get access to all of our services, including all of our online trading courses, our strategies, all of our terminology, our research, our week ahead trading plans, you can do so very simply. I'll talk you through that now. In order to get access to that, all you need to do is go over to www. Let me just bring that out for you. This would be a case of going over to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. Please, when you make sure an application, when you do put through an application, do make sure that you mention that you've been on binary.com, or either if you're watching the recording that's been sent to you by email or on YouTube, or everybody on the live session today, we do provide a very special offer to attendees from binary.com, clients of binary.com at the Gold and Silver Club. We get a lot of applications every day, and in order to provide you with that special offer, otherwise you get quoted a higher price. So make sure if you make an application, you mention that you are a client of binary.com, and then we've got a very special promotion for those who are attending our these sessions on the Commodities Corner or our YouTube channel. You get a very special promotional price. Okay, so just make that clear when you make an application. Okay, so let's just go through the top trades of the week using our research-driven strategies. So those have been as follows. So we've caught this breakout trade on gold going back to the 29th of December. We've had a number of different expiry times on this because we've taken advantage of the January effect. Another trade has closed just yesterday for the price to be higher than 11.46. Of course, the price is much higher than that at the moment. It's currently trading above 11.90, so that has worked out very nicely. Also went for a sell short earlier on this week on WTI crude oil. You can trade that via Brent crude oil on binary.com for the price to be lower, entering at 53.40, just to be in and out by the close of the following day, which worked out perfectly for our sell. And also catching the palladium trade for a buy above 690. That broke out, surged, and of course came out of that the early part of the week on Monday. We've got a few more open positions on gold, platinum, and palladium, which continue to expire this month because of the January effect, where we time those expiries. We stagger them so we can benefit from just different times of expiry, so we can capitalize on the January effect move. That has worked out perfectly. So again, if you'd like access to highly profitable live trade ideas shared with you, ready to implement for instant results, just go across to www.jointhegoldensilverclub.com. I'll break it down for you and just explain to you what that includes and who it is for, okay? So I'll just put the link in the chat for all of you here as well, so you can easily go across to the website. www.jointhegoldensilverclub.com. Okay, who's it for? Okay, so essentially, whether you're a new trader, you just want to develop a solid understanding of the markets and really fast track your results, particularly if you've not been consistent or if you're not making money at the moment, we'll help turn things around for you. And also, if you're an experienced trader, but you might be more experienced with Forex or equities and commodities, or is of great interest to you, you'd like to learn how to trade these markets, also very much I would recommend to you getting involved in the live trading room at the Gold and Silver Club. So what does it include? Well, essentially, you get, of course, the live trading room webinars during the week where you can watch us analyze the markets right in front of you, picking out our highly profitable trade setups, going through entry, exit, take profit levels on all of our trades. You also get our notifications that's sent out via SMS and email, so that you get notified every time there is a new trade, trade management, any updates, breaking news. That's all sent through immediately as soon as anything new occurs in the markets. You also get access to our commodity research and market insights, so you get access to our proprietary trading research and market insights to help boost your win rate, gives you more of a research-driven approach to trading, so you understand exactly why you're buying or selling a particular market. So everything that you get by being a member of the private members live trading room includes our exclusive live trading room webinars during the week, live trade setups ready to implement. You get notifications via email and SMS, so you're not missing out on profitable trades. You get details where to enter, exit, place a stop loss. You get our trading plan with a watch list of trade ideas, live trade support to help you through each trade, and institutional level trading research and commodity insights to give you the ultimate edge in the market. So of course, for more information on joining up, and if you'd like to make an application and just have a consultation call with us at the Gold and Silver Club, just go to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, fantastic. So I don't think there's any more questions at the moment, guys. So with that, of course, I wish you all good trading. Have a fantastic weekend. Very much look forward to hear from those of you who will be making an application and joining us at the Gold and Silver Club. And yeah, take care, everybody, and good trading. So I'll speak to you real soon. Thanks, everyone. Have a fantastic day. Bye-bye.